Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
$14.90 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. If you're wondering if gold and silver are up and are going to stay up, if oil is just going to take off to the moon, Ranting Andy Hoffman is back to answer those questions and others that the audience has as well. Andy, welcome back.
Hey, Carrie, how are you doing?
Doing good. I've been transfixed by the gold and silver prices. What's your take on it?
Right. Well, I've been talking now for weeks and weeks, actually months now, about the lines in the sand, as I call them, at $17.50 on the gold price and $34 on the silver price. They clearly, starting with back in September with PM Annihilation 1 operation, they've been holding the line on those levels. It's they hold the line on these key round numbers. For years I've been watching this, but I've never seen anything like these two particular numbers. And my only take, my best guess as to why they were so important is because I simply think 1750 is just a level where you're looking right up at the all-time highs once you break past it. And as a result, and I talk about this all the time, of these constant cappings at the same level, they wind up creating these massive resistance levels that once they get broken are, often never, they become massive support levels and often never get broken again. I believe in silver. We saw that at the $20 level about a year and a half ago. And I think that they may have just created the same kind of impregnable long-term support at $30. I really don't think we're going to go below 30 again. And now that we've convincingly broken $17.50 on gold and $34 on silver, I think it's inevitable that we run toward the all-time high in gold later this spring, and maybe this summer the latest, and in silver certainly the 40s and probably to the all-time high of 50 by the summer.
Yeah, and when these things break out, and because they've been suppressed so long and there's all that kinetic energy there, they could go up a lot faster than anybody, even you and I, picture, can't they?
Right. Well, my price targets. My price targets based on today's dollars, not on future inflation, are $15,000 to $20,000 for gold, and a gold to silver ratio of between 5 and 15 to 1. And that's just based on the overt amount of money that's been printed, forgetting all the stuff they don't tell you about. So this is not just guesswork, pie in the sky. This is simply math based on how much money's been printed. And the only reason that they're not there today is because of the paper manipulation that's been going on for a decade. And, they've been getting, the other thing I've been writing about for some time is the diminishing returns on their attacks. They're attacking far more often now, far more intensely, and they're getting far less bang for the buck for what they're doing. They're spending more money and getting less out of it. And, silver in particular, if you look at the chart, long-term chart, it's rarely been below its 200-day moving average over the 11-year bull market. It just spent 5 months below it for absolutely no reason. And now that we've retaken that 200-day moving average and we're putting it in the back mirror, I think it's going to be massive support. And I really think that a run into the 40s is imminent.
Yeah, that's I think what they did, they refer to as painting the chart. And they've certainly painted it here. You really see that, there's no reason for it to have been under its 200-day moving average. It just, the gold was the same thing. They both broke it, and that started people questioning the rally, whether the bull market in the metals was over. But here we are, a month later, 2 months later, and boom, it's back over, and it's moving forward. And there was an analysis done. I don't remember who did it. I think I saw it on Zero Hedge. But last week, when it was breaking 34, they showed the paper going into the market hour by hour by hour, and they sold something like 7 million ounces of unbacked paper in the course of an hour, and it did absolutely nothing. It slowed it down a little.
It was 100 million. It was 100 million ounces. Yeah.
Wow.
Yeah, and there's still some speculation about how correct that data was, but it, the data you're looking at showed 100 million ounces being sold into the paper market right at the end of the day on Friday. I mean, the fact is that you're going back to gold. That has been only under its 200-day moving average about 5% of the time in 12 years, and the fact that it went down there. It even got 5% below that average back in December was remarkable to me because obviously there was no reason for it. And the only short-term prediction I made at the end of the year was that gold wouldn't stay there for more than a few weeks, and I think it was 2 weeks. And, with the same really should go with silver, except that it's a smaller market, and they got a lot. They created a little more technical damage during their attacks during the wintertime, but considering the amount of damage for it to have recovered so quickly, and now to put that 200-day in the back mirror so quickly afterward is a very, very ominous sign for the cartel, in my view.
Oh yeah, and another interesting thing is silver almost got to $50 an ounce, right? 49.50 or 80, yeah, 49.81, and the fact is, there were very few people who actually bought the physical right at that moment, who went all in on silver. Most of the people I know are from anywhere from $4 an ounce up to $30. They piled in. My last acquisition was $28.71. A good friend of mine sold his Jeep when it hit $28 2 months ago and put it all into silver. And I said, well, maybe you should think about the living room furniture. He said, well, actually, now that you mention it, I sold off the living room because they were having a 0% finance deal. And I took all that money and I bought silver. I said, did your wife know that? Man, she must have been ready to kill you. And he said, shh, don't tell.
Well, I recommend to anyone that talks, I get asked all the time, should I borrow from my IRA? Should I borrow money to buy gold and silver? And, it's a very dangerous game to play because if the machinations go on longer than you'll have the ability to pay back those loans, you're going to have to sell some gold and silver. And again, this is gold and silver are not investments. They are not there to buy and sell. They are there to put your savings in. And if you don't have the savings, you really should be careful about taking other people's money and putting it into them.
Yeah, well,
and as for the $50 you were mentioning before, when the price of silver was $50 back in April, there was no inventory. And we're talking about 3 or 4 month wait times throughout the industry, premiums of 25% or more. So there really wasn't much to buy, even if you wanted to. And I wrote a piece last week, which thus far might be the most popular piece I've written in 4 months at Miles Franklin, called The Ultimate Quadruple Top Breakout, equating not the $50 price, not just as the high from 1980 and the high from last April, but also the high from 110 years ago when the major silver discoveries were made in Idaho and California. So I think when we break out past 50, you're going to have what I call the ultimate quadruple top breakout over a century's time. And I think the inflation-adjusted high of $800 an ounce back from the 1400s when silver was real money around the world, I think that's going to be easily taken out, and it coincides with my $1,000 to $4,000 price target right now.
Yeah, and there really won't be any technical resistance to stop it once it breaks through 50. And the one thing, I agree with you about not borrowing money that you can't afford to borrow, but if you've got a higher interest coupon on your home loan, on your home equity loan, and you can refinance it now, meaning that your credit's still good and your income is adequate to service the debt, and you can save $400 or $500 a month, to take that savings and put it into metals, into silver, is a good thing, and it's not going to crimp your style, and you're not taking an undue risk. You're actually realizing a savings because of government subsidies and government inefficiency, because if the government wasn't backstopping the mortgage market and the home sale market, the real estate market, the price of free market money would probably be in the 8 to 10% range at least, and that brings me to another thing. There was an article, I don't know if you caught it, about how government screws up the price of higher education, and that subsidy that low-cost loan, overly generous with grants, it hasn't made college any affordable for the middle class. If you have a kid and you're struggling, college is just as out of reach. However, what it has done is enabled the colleges to raise prices and to really capture a huge profit off of the government's back, off the taxpayers' back, for that matter. And we see when government gets involved in any market, whether it's metals, higher education, housing, mortgages, this is what happens. These dislocations, malinvestment.
Right. Well, the last great thing that the NIA did before it became a pump and dump scheme was put out College Conspiracy, which is a fabulous synopsis of how government intervention has destroyed the college education business. Long before that came out, I've been telling anyone I know with kids not to worry about college. College is a privilege that we had in this country when the dollar was strong and people were just throwing money at us, just to send your kids to go party for 4 years, because very few people really applied themselves and got something out of it, or certainly they paid a lot more for what they actually did receive. Most other countries, you go to school for what you're going to do, and you save your money and you go into the workforce. There's actually an article literally an hour ago that showed how student loan growth has just gone off the charts. If you go to Zero Hedge and just see the piece that says "Name that bubble," and you see that we're almost at $1 trillion of student loans, all of which are non. You can't get out of them in bankruptcy.
Non-dischargeable in bankruptcy. Thank you, David Stockman, because they passed that law. If you remember, he was Reagan's budget director. He went bankrupt to dump his student loans. Maybe I don't remember the exact story. It's 20-something years ago, but Congress saw that. They were outraged and they said no more discharges of student loans in bankruptcy. And now we have this whole class of debt slaves who owe six figures and have no means of ever paying it back, and it will be with them for life, because if memory serves me correct, there's no statute of limitations on student loan debt either. You could be sued at any time, and they could be yanking your tax refund, both your state and federal, and forget it. It really, and what benefit did they get from it other than 4 years of partying? They got a lifetime of servitude.
Yeah, it was basically $1 trillion of printed money that got no benefit, except for the colleges and the government people who get bribed, to get these things done. It's funny that you say David Stockman. He's one of the few guys who returned to the good side of the force.
Right.
And now he's talking the way he should have been talking back then.
Yeah, he's a neighbor over here. Him and John Merriweather, they're all in the in Disney World here for hedge fund managers, also known as Greenwich, Connecticut. So, it's just really kind of sad that people were never taught to do an economic cost-benefit analysis of college. I mean, probably if they did that, my parents would have taken me out of 10th grade and put me to work, but and we would have moved because we were in a good school district, and he would have paid a lot less in taxes. But be that as it may, yeah, you're totally right that college needs to be rethought, and the whole debt and what real money is. Everything there was that old album by Firesign Theater, everything is wrong. And when it comes to the economy, for most people, everything is wrong. And hopefully we're educating them a bit.
That's right. You need to avoid the propaganda about the American dream. The American dream is dead. The American dream now is the same dream as every other country. You have to work hard for what you get. And if you don't work hard, you're going to get nothing.
Yeah. And what's so wrong with that anyway?
Right. That's the world.
You and I think, were raised probably the same way. We might have had the same father and not known it, but my father, hated the government and said, don't think anyone is going to be there to catch you when you fall. If you're lucky, your family will, but even that is a question mark. So now you have to become your own central bank. You have to prepare and think ahead for everything that they're going to do to try to mess up your life and try to avoid it. There's really no other way, is there?
That's right. That's right. And there's the only way to protect your wealth is going to be with physical gold and silver. And I can't rail enough about how risky mining stocks are. Yeah, you may make a lot of money, you may lose your shirt. And I've seen plenty of people lose their shirts in mining stocks. And the goal is not to speculate, it's to protect yourself.
Yep, exactly. And I mean, yeah, we say it over and over again, and I probably say it 20 times a day on the radio show, but people don't get it. But I think more and more people are getting it. I got, just based on the emails that I'm getting, comments to the shows that we post, people, a certain portion are starting to pick up. And when gold breaks 2,000, when it breaks 2,500, and silver is inching up with it, moving right along with it, at some point there's going to be this mass awakening, and then it's going to be too late. So,
Nate, and you had a question from a listener
right.
About silver?
Yeah, let me play it right now. This is from Jeff, a loyal listener to the show. It's for you, Jeff.
Hi, Kerry. Really enjoy your show. This is Jeff from Boston, and I have a question about what is the best form to hold silver in? Bars, coins, what's the best value as far as the premium? And in the event that you need to use it, what's going to be the easiest to use? Thanks.
Okay, so you heard that. So what's your thoughts here? What's the best way to hold silver, and what form and premiums? I know we've talked about it before, but people always have this question. I'm sure you get it all the time.
Yeah, and it's in general, the answer is to each his own. There's no exact answer, but the fact is, the smaller denominations in general, whether you're talking about gold and silver, are going to trade at higher premiums because they're more liquid. It's more of an issue, obviously, with gold. People are not really buying half-ounce silvers. They're very hard to even find them. But if you're talking about just pure silver and you're not talking about gold, look, for the most part, you're going to be buying 1-ounce coins. I mean, yes, you could buy 10-ounce bars, 10-ounce or 100 ounces even, but they're very difficult to store once you get bigger sizes, and they'd be much harder to barter with as well. They do have smaller premiums, but for silver, you really should be focused more on 1 ounces. That's the most universally owned type. Now, there are different kinds. You have the minted government coins, like the Silver Eagles in the States, the Canadian Maple Leafs, Austrian Philharmonics. Those are going to trade at higher premiums than the generics, which mean they're not minted by government mints. But in time, my belief is that the generics and the minted coins are going to come closer in price. The premiums will, as people get to understand the differences between the different kinds of coins. It may take some time for that to happen, so a lot of people feel safer with the higher premium coins. But I would recommend having some of each. I'd have a stable base of Eagles and Maple Leafs and the like, and then there are some of the other generics like Buffaloes would trade at smaller premiums, which you might want to diversify into as well. Sure.
And having some 90%, as one person calls it, constitutional silver,
right.
Pre-1965 silver coins. If you can afford a bag at, what are they, around $25,000 now? Does Miles sell them?
Oh, yeah, we do. And they're different size bags, but they are several thousand ounces. They're 90% silver dimes.
Right. So having some of them is not a bad idea either, because they'll be the easiest thing to barter with. If we wind up bartering, which you have to be prepared for. And even if not, I mean, I bought, smaller bags. I mean, I was looking at these bars, Andy. I bought them on eBay, something that you have to be very careful of. Johnson and Matthey, 100-ounce bars. I remember it vividly, $999 a bar. And there was a deal with Microsoft. They were giving away, if you found the purchase through Bing, which you could do with eBay, you'd find what you wanted on eBay, you'd put in the auction number in Bing, it would take you they would give you 8% off, up to $200. And I mean, it was just up to $2,000. I took advantage of the full $2,000. It was the dumbest thing. They were just giving away money. That's how much money they had.
I remember that. It was in 2008 and 9. I used it all the time. I forgot what they called it, the eBay Cash or something.
Cashback. Yeah.
But no longer.
No, they got wise to it, but luckily I got mine, except I had $200 in limbo. And like a year later, they just sent me into my PayPal account $200. And I said, where did that come from? And then I looked, but you can't do that anymore. But the amazing thing is when you see the value or the price of what you paid, a third for, actually less than that, 3 years ago, and now you see it's worth almost 4 times what you paid, and really the silver didn't change. It's just the value of the dollar that changed. That's the amazing thing, because then you realize, it's like you think the speeding car is moving ahead, but it's really the ground that's moving backwards, And
that's what I'm trying to get across to people, that this is not an investment. You're not buying low and selling high. You are simply exchanging toilet paper for something of real value.
Actually, you're being too generous to the dollar by calling it toilet paper, because toilet paper is very useful. And pretty soon, there ain't going to be any use for those paper dollars. So on that note, Andy, where do we find you? And you take emails?
Yes, milesfranklin.com, or you can email at ahoffman@milesfranklin.com.
All right, Ands. Well, this is definitely an interesting time in the market, because you could see the futility of the cartel's actions, and you can see it kind of coming to an end for a while, and then we're going to see that increase. I mean, that's what I'm expecting. All right, till next week.
Take it easy.